Well, good afternoon, everyone. Hope you're having an amazing day. Let's go ahead and make sure you all can hear me. If you please type the number 1 in the chat box in the comment section and let me know that you can, I would greatly appreciate it. Thank you for that, Jeff. Number 3. Hey, Bruce, how are you? Amy, good afternoon. Kevin, afternoon. Helen, hello, hello, hello. Good morning to you. Hey, Elsa. Afternoon, John. You're welcome, Bruce. Yeah, I missed it this morning as well. PK missed doing it. It was, same thing. Jeff said the same thing. Sorry, guys. It's just some of you know, some of you don't. My in-laws' home was part of a fire a couple of weeks ago. My father-in-law is 92 years old and homebound, and he's having some serious problems with smoke/mold type stuff that's happening in the house. So we're fighting with the insurance company to try to get it all done. So we got all kinds of calls and stuff in the middle of the night. So I just could not make it this morning. So I do apologize for that. But yeah, I appreciate that, Kevin. Thanks, Jeff. Appreciate that. Yeah, PK, I understand, but I still missed it. Me too. I get stuff. I'm sitting down last night at 9:30, prepping stuff, getting it ready, to get going for this morning, and la-di-da, there we go. So, all right, well, welcome everyone. Yeah, it's all going to be good, Helen. They got the basement part where they spend most of the time is completely ripped out now, and they're drying the walls out, and they got air scrubbers and HEPA filters and all kinds of fancy names for stuff to clean the air, right? They're there today. I haven't spoke to my brother-in-law yet. He's there with them, but as soon as we're done here, I've got one more meeting, and then he and I will be on the phone to try to figure out what the next steps are. So, but I appreciate everybody's thoughts and prayers. That's always helpful. So as we get started here today, keep in mind that everything we look at is for educational purposes only. Nothing is meant to be advice or recommendations. All of the candidates we use are hypothetical and just for examples. All right. So let's go ahead and jump right in. We got a lot of stuff coming up, guys. Trading You comes up on the 11th. So that's next week. None of them are this week, the premium trainings, except the mastermind group, right? That's every Tuesday night at 8 p.m. A Power Hour Trading Coaches Playbook and Market Mornings, with the exception of today, hopefully, are on the schedule for this week. They're all on the docket. Key to Be Free. We have got 3 of them coming up. Actually, I think there might be a 4th one. It's just a little bit further out. But May 7th at noon, May 9th. No, that's why we got 2 of them there. May 9th at noon and 8 p.m. and May 11th at 12 p.m. Yes, if here we are. I've said it before. We're past the New Year's resolution stuff. Everybody's already given up on the gym. They stopped going there. They stopped eating good. They stopped focusing on the market the way that they should be. All the things we should be doing right out of the gate for the new year, right? Which you never should wait for the new year. And all of that's changed, right? Things are back to the norm, if you would. But there's still that desire by so many to get to that next level. And that's what Key to Be Free is all about. And that's why we named it Key to Be Free. This training is your key to be free. Yeah, Jim, what's a gym? Exactly. Trip said, I didn't stop. And I'm so excited for that, Trip, that you haven't, right? But so many others have. And even if you haven't, you keep pushing, and yet you're not there. You haven't seen what you were hoping for. You were thinking you might have been a little bit further along than you are. You cannot afford to miss these Key to Be Frees. They are all going to be taught live. And none of them are recorded classes. They're all live. When you go to the Key to Be Free banner, which is on the members area, there's a drop down, and you can choose from which one of the trainings you want to do. They're filling up quick already. We just really started promoting them. They're filling up quick. So we only hold, I think it's in a 1,000-person room. We only hold 1,000 per show. So if you're interested, go there. And the hint is always make sure you show up early, right? Get there. We open the doors up about 30 minutes in advance. Get there early enough so you make sure to get a spot in that training. Power option plays, covered call explorer, E-mini think tank, wealth with spreads. All of our trainings are on their regular schedule this upcoming week, right? And Amy dropped the link in there for the training. All right, let's see. I'm not really sure where that's going to open up. If it does, okay. And there you go. There are the trainings. Looks like we've got a wrong date in somewhere. I just got to check where it is because there's 4 different dates here. But I think this is the right one. I think what I've got on my document is incorrect. But what's here is right. What's here is right. So there you go. Fill that out. Get yourself ready to rock and roll. And you'll be good to go. That's the link that Amy just dropped in there. All right, here's our follow us page. Make sure you're following along with the various social platforms that we have out there each and every day. And we're adding new ones to it on a regular basis. And this is key to be free, guys. Just go to the members area and that's where you'll find it. All right. And we're at a point now where I don't want to show you the next slides because that is the trades for today. So I'm going to ask you guys, what did you do today? What trades did you do? Talk to me. How did you do in the market today? It's only 12 o'clock. Market's been open just a couple of hours now. How have you made out up to this point? Drop them in to the content there, to the chat box, and let me know exactly how everything's going for you guys today. And while you're doing that, I will go ahead and bring over the trades for today. So the trade of the day, these are done by Amelia. Many of you know Amelia. She's our head trader, right? She's been trading for a very long time now. Is just a guru when it comes to it. And you look, both of these are today, right? The entry and the exit, they're about 2 minutes. We'll call it 2.5 minutes apart, right? We did a buy to open. Amelia did. She did 13 contracts of the 408 calls, and she bought them at $5.14 market order, okay? She had a trailing stop in place and got taken out at 9:49, almost 9:50. She got taken out at 9:50. 7% rate of return in 2 minutes. She sold them at $5.50. So if you go 15 to 50, it's at 35 cents. So she's up 35 cents, guys. And she needed $5 in order to do this trade. So she did awesome on this. You got 35 cents on 10 contracts would be $3.50. Another 3 contracts, call it $100. You got $450 of profit in there in 2 minutes. Yeah, there you go, Brenda. Go, Amelia. Go, go, go. Go, 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 go. And then here's another one that Amelia did. This was a bear call credit spread. So it's a vertical spread that she did. It involves 2 call positions. And you can see she does 3 contracts of each on Microsoft. And this was the 6th of May options, which is this Friday, right? The 280, 282.5 call. She got a credit on that trade of $1.60. Right, so they paid her $1.60 to place that trade at 9:35 in the morning. Her maximum risk she took in $1.60. Her maximum risk was $2.50 minus the $1.60. So 90 cents is her maximum risk in this trade. Good rate of return for sure. She wound up getting out of the trade 2 minutes later, just 2 minutes later, for 80 cents. So she gave 80 cents of her $1.60 back. She's got an 88% rate of return in just 2 minutes. Great job there. Erica said, excited about key to be free. Me too. Can't wait. Can't wait. Can't wait. Trip said, scalp the SPY for 15%. That, guys, that right there is the number one thing I'm seeing happening right now in market mornings, are traders going after the SPY and the Qs. And some of the candidates that we announced from the day before, of course. And the really cool thing is when you look at market mornings, it's not just the candidates that we come up with. I'll ask in there, hey, what are you guys looking at for today? And you'll see other trades that other traders that are in there are looking at. You know, can you look at Apple? Can you look at Microsoft? Can you look at whomever? Okay, we'll pull that up. We'll give some analysis for it. Usually there's a trading plan that comes involved with it from many of the traders that are in there with us. And you're seeing the students the next day are trading some of those same candidates, right? Which is great. And the conversation is going back and forth. Fantastic, right? 2 minutes, 88% rate of return. So nice, right? Jim said, SPY got into the puts at 10:40 a.m. Still in. I'm up 30+% right now. Nice job. Nice job. So Paul said, for the pop tracking sheet, could you briefly explain the process when you mark a product, which is a symbol, right, as an earnings trade? Sure, we can go over that. That's not a problem whatsoever. Let me actually see if I can bring it up. I got another spreadsheet we're going to go over while we're here today, but so this is an older tracking sheet on power option plays. And still a lot of earnings going on out there. So at this point for this sheet, actually Amazon was the first one. Okay. So this was for April 18th. Okay. We're looking at anything that had April earnings within or less than 21 days away, which would be the 9th of May. Okay. So on Amazon, I give you the bullish and bearish targets, 2 of each, and the earnings within the next 21 days. Okay, is what the note says. So what we're looking for in there, Paul, all it really does for us is we convert this into a day trade. That's all it means is day trade. Once the word earnings is there, you cannot in power option plays take a directional trade as a swing trade. You cannot. You can only take a day trade on this position. It's as hard and as easy as that. We day trade the position, but we write earnings so we know that it's coming up and we don't get blindsided, because we have other ones like NVIDIA that just say day trade because earnings were not a thing for them yet. Whereas if we get a little bit closer, NVIDIA, they did already, right? No, NVIDIA is May 25th. So they're still not even on our list as an earnings candidate yet. All right. Does that help, Paul? Does that answer it for you? Let me know. All right, good. I think we got a lot of people that are concerned about trading right now because of what's going on in the market, and understand that fear is very prominent, very prevalent, very much out there right now. I mean, you look at futures and what the heck is going on. And here, look at the ES. Right now, remember, the ES trades from 6 p.m. Eastern time on Sunday until 5 p.m. Eastern time on Monday. Then it's off till 6 p.m. and it'll trade again till 5 p.m. Okay. So if we look at what has happened since yesterday, and let me just get a different color. There we go. We gapped up, pulled right back. We ran up, lower highs, we pulled down, higher lows. Oh, a little wedge pattern going on there. Lower high, higher lows. About equal high, slightly lower lows. So we're kind of going here and then here, right? We got a nice little pop there, and then we ran sideways all the way into and through the start of the European market. We got our sell-off right on the beginning of the market there. And then we just got this big push down, a lot of red bearish candles, good bearish thrusting pattern right there. By the time we got to the US market open, we had a nice pop in there, but we've been all over the place. It's just been an absolute slop house along the way. We have not had a really good, strong movement one way or another to give clear direction in there, right? And this is on ES, which the S&P 500, exactly, Trader Will. We got huge wicks on many of these, including that topping candle right there. Right, this is ES. If we look at the NASDAQ, which is NQ, and this is just the futures component of it, is all it is, right? Very, very, very similar pattern. Very similar pattern. Yeah, the wedge taking place early on, the sideways move through 4 a.m., and then the drop, and then the slop into our market. All right, so everything we're looking at is just all over the place. So we pull up the Dow, which is the YM. I mean, pattern is there. It's the same exact pattern. We're going to go look at the rut. And same pattern. Okay. So just very much an indecisive market. We're all over the place. You know, I had CNBC on this morning, and Becky Quick was talking about where we were down, we were up, and now we gave those earnings, those moves back, and now we're down, but it's starting to bounce and come off of the lows, and you're just all over the place, right? Which makes it a very difficult market to try to trade within effectively. Yeah, so Paul said, sure, thanks. Even if the earnings were this Thursday, you would still only do a day trade. Yes, if the earnings are within 21 days, Paul, and on the tracking sheet, that's why I have it there. Where did I put it? When I send this out, it shows earnings, and this was on the 27th, right? But earnings after May 18th. As long as the earnings are after May 18th, it doesn't get earnings on it. The second it gets earnings listed on there, we no longer day trade. Swing trade. We only day trade. All right. That's the key there, is we only want to day trade off of there. Okay. So you've got to be careful in this market, guys. You've got to be uber abundantly crazy, nutty, silly, careful in this marketplace, right? As far as what you're trying to do. I talked to someone the other day that is having success with swing trades, doing a couple of them, a handful a month, picking low vol stocks that he's trading them off of, right? And not that the strategy doesn't work. He's working. It's working for him. But I think there's a lot more work to try to figure out some of those components than following what the overall market does. So the market's chopping, then you want to be day trading, getting in quick, getting out quick, calling it a day. That's it. Quick in, quick out, boom. That's it, done, move on to the next position, all right? So, all right, so not a lot of trades off today. For me, guys, United Healthcare, we called that one yesterday, and I did power option plays yesterday. It was a neutral bias, so it's a day trade, right? If we look at United Healthcare, and let me just bring actually all symbols up here. Okay, I'm just going to close this up a little bit. Beautiful. Okay. So United Healthcare, if we look at it yesterday, right? If we look at yesterday, Friday, we closed below that 510.25. We were in a neutral bias at that point, but the 8 had already moved down below the 21. We can take a directional trade on this if we wanted to. Now we had this down as day trade because it's neutral. So we are going to look to take a potentially bearish entry. So what happens? Closing here, we gapped up, and we gapped up above that 510.25 level. We stretched higher and then failed. The key is, what did the fail look like? In other words, did this happen right here? As we gapped up, so if we close here, we gapped up to here, right? That's the top of our candle. We ran further, and then since we've failed, and this goes back to, again, this candle right here, okay? So the key is, when we broke down, we gapped up. When we broke down, did we get a retest and a fail? And that would be the entry right there. Well, Rob, what if we didn't get it and we just had the break and you never took the trade? Okay, then for me, it's no trade. No, but don't you want to take that? No, I don't, actually. I don't. No. I want to take a setup that gives me the best opportunity of being right. And a breakout, to me, not saying they don't work, guys. For me, breakouts are not the correct trade setups to take. They don't work for me. So let's go look intraday United Healthcare. And there's the 510.25 level. Let's go back to clarify it for you. 510.25. There's the 510.25 level that we were looking for the retest off of. So we gapped up, as I said, we ran, right? We pulled back and closed here on the next candle. You had a retest here and a fail. Okay, you had it right there. So there was the opportunity where we stopped out on the trade. If you took it there, oh, I forgot I got the drawing tools on here. Well, let me grab another screen. right? So if we look, you're looking at about 512.5 would be our takeout point for a stop. Okay. So if you took the test here on that wick, which would be more aggressive to take it there, right? Because you really wanted to do what? Those of you that are in power option plays, you wanted to close near that 510.25. That's not what happened there. We closed very far away from that 510.25, 508 and change, right? We closed very far away. And then that wick just became a whipsaw inside of there. Okay. So from there, what did you have? You pushed up, you got a lot closer here. All right, 509.93. So 509.53, sorry. 53. Closing price 509.52. So 509.52 to 510.25, that's about 73 cents, right? Much better setup there. Okay. The next candle just failed off of that. So if you took the entry off of here, which again was more aggressive because you did not close near it, this we got a much closer close. It's within that dollar. And then that failed, you got a better opportunity. This would not have taken us out over here. Right? Our high was 511.5. And we said 512.5. So you were not taken out of that setup. Okay. If you took that second test, and that's about that 10:30-ish. I'm sorry, not 10:30, 10:05-ish time. If you waited for the break, the close above this and this, you could have taken it off of here again. There's 100 ways you could have taken it, but that early whipsaw stopped you out if you got into that trade in the very beginning of the day. Right? If you did not, and you got in about that 509 price point, and right now we're at 505, you're sitting pretty at this point with some decent profits in there. The question is, do you want to lock them in or not? Right? Yeah, take the money and run. Exactly, Will. Good, Paul. Glad it made sense for you. All right. So this was today, guys. I mean, didn't do much else. Mondays are always a crazy day for me. I am much more about managing my covered positions on Monday, looking at newsy trades, which I didn't do any of today because of just how late of a day it was for us. Jim said, on the SPY, the Fibs have broken below the zero line. What are the rules to redraw the Fibs when it closes below the -236? So if we look at SPY, Jim, so there's no redraw rule here needed, right? I'm fine with it going down. But basically, the rules for redrawing the Fibs are this. You're looking for the largest directional move closest to the right side of the chart. The initial move where we drew this Fib from is bigger than anything else that we've seen yet in here. $52, this is 46. In here right now, and if we call it a hiccup, you're looking at 41, okay? So we don't have anything bigger there. So that rule is gone, right? So we don't need to worry about that piece yet. The second one is if the stock closes on the other side of the 882, which is here, right? That's rule number 2, the 882. 882. And that was the second rule. Right? The third rule is if it closes below the -618. And even though it closes down there, you may have bearish candle, bearish candle, bearish candle, and not have a bounce, no V bottom, nothing to draw. So we can't, there's nothing for us to redraw. We should, we look for a place to redraw, but we don't have it yet. Okay. The fourth one is if you get more than 8 to 10 months long, historically, it starts to become a very funky Fib. like that funky Comedina, right? It's kind of ugly. It's old. Do we trust it? It's been tested many times, and so forth. So that's really where we start. That's kind of where the weakening factor takes place. And it's just time to look somewhere else. All right. Does that help, Jim? So what does the ABC look like on the Fibs? Brenda's asking. So if we grab the Fib extensions, we come from where we started the Fib to where we drew the Fib down and come up to where you had your failure point here. All right. So our 1 takes us down to about that 406 level. You got it, Jim. Jim said, yep, writing notes. Thank you. You're welcome. You're quite welcome. Right? Could you drag C over to here? You could. We've already had a full retracement there, so I think this is kind of overkill now. So I would leave C here. All right, Brenda, is that what you were looking for? I am going to take it off because we're not using it right now on pop, so I don't want to leave it on there. Yes, good. You're welcome. You're welcome. Let's see. Kevin's asking, what are your thoughts on the Fed? Let's see. Give me Mo, give me Mo, give me Mo. Okay. Let's grab us. Wednesday, May 4th. Okay, there's your statements. This Wednesday, right? Which is the 4th. You've got the FOMC statement. You got the federal funds rate, both at 2 o'clock and at 2:30, a press conference. Okay, the FOMC statement and the funds rate are going to be fine. When I say they're going to be fine, they're going to be scripted, right? The press conference is where the questions get thrown out there, and that's where the slip up is. That's where you look for verbiage. You're going to look for it in the FOMC statement as well. If you start hearing things such as we're going to back off because of the midterm elections, which they normally do. Originally, with the way the market was looking, the market was planning in 2 to 3. I've heard one guy say as many as 7 half-point rate hike increases this year. Not with a midterm election. We normally don't see that happen. Things would have to be really dire, for us to be doing that. $40 loaf of bread or something. I don't think we're going to see any of that happening, knock wood, anytime soon. But you've got to pay close attention to it, right? Kevin, think about it. The Fed's coming out, and what they say has just so much grounding to it, so much value to it. It's such a powerful component for what goes on. If they come out and say inflation is bad, we don't see us catching up, you're going to see the market come crashing down. Even if they only did a quarter point, half point, it wouldn't matter, right? If they do anything over a half a point, I really think we're going to get crushed as far as the market moves go. And we're going to talk about the market moves today. That's the topic for today, right? The educational topic for today is the moves, right? So I think we've got to see what goes on with it. I don't have an answer to it. So I don't know how I got started on it. Someone had suggested I take a look at something that a student had asked me to answer a question on Quora, which I went up and did. And then I've answered a couple of others since then, all market related. I don't deal with anything that's not market related. Although I can answer pretty good questions on running a business. I can answer a lot of questions on woodworking. I'm okay as a fisherman. I'm not great. Everybody around me seems to catch more fish than I do. I just know how to put them on the spot. I'm just always on the wrong side of the boat. But I answer questions on market. And someone put a question up of, do you think the slide we saw in April is going to continue through the rest of the year? And I asked questions in that question saying, well, that's a great question. Can you answer this? What's the Fed going to do? Are we going to get inflation under control? Is COVID back again with restrictions in second half of the year, in fall to winter time. Is the war in Ukraine, Russia over? See, all of these factors play in. The Fed right now is playing catch up. Our interest rate has been too low, too long, and should have been raised more than it has already up to this point, and has not. Now it's going to be catch up, and that's the fear of we've got to put those bigger increases in, and we get this fast turnaround. You just whipsaw everybody around, and there's a lot of discomfort, uncomfort, whatever you want to call it, in there. And I don't think it ever bodes well for the market. Those of you that are in mastermind group, those of you that are in inner circle, you've seen me go over this scenario of what the market does and how the markets tend to fail, and where in 2000 and 2008, where we took the Fed fund rate literally from less than 2% to up to 5 or 6% in just months, under a year-ish time period. And then the markets crash right after that, right? That's where the markets absolutely fall apart, right? And some are looking at it and go, but Rob, didn't we fall apart already? I don't know. Not really sure about that, and we're going to talk on that in just a minute. But you're welcome, Brenda. So Jim said, SPY calculated 20% retracement off the high January 4th. Now I show 393.98. You have a note line on your SPY chart of this. So I don't have it on SPY, Jim. What I do have it on is SPX. All right, and my 10% correction is 43.37. That's what the 10% takes me down to, okay? And then I've got a 20% way down here at the 38.55 level, which is a 20% pullback retracement, and that is a bear market when we get down to 20%. All right, so, and again, we're going to talk about this in just a moment as our topic today, but it is something that you definitely want to be aware of. 10% corrections are a good thing. Right? You get a nice rocking market, you pull back 10% and you take off again. We're not taking off again. We're all over the place, and there's a lot of factors that are playing into this. This massive 100+ point move on Friday. We broke this major 41.81, this dark black thick line right here. This 41.81 fib line, right? We respected it well. We broke through it, came right back. 2 times in a row, we respected it. The last day of it, the wick, bounce. Came back 1, 2, 3, 4 days before we broke on Friday, and now it looks like we retested it today to fail. Right? So far. So I don't have it drawn on SPY, Jim, but I do have it drawn on SPX, which I look at every single day. And again, I'll talk about it when we get there. So I hope that helps, Jim. And if you have more questions, just give me a few minutes. We'll be there. Brenda said, Rob, I have a question. Which is better to have, a Roth IRA or a regular IRA for someone who's retired? And is a Roth something you can open with any amount? So you limit a Roth and a traditional IRA, you're limited to the opening factor of whatever the amount is that either A, you're allowed to contribute for a year, or B, a transfer of whatever's in your other account. Right. So if you had another Roth and it had 20 grand in it, you could transfer the 20 grand. If it had 2 million, you could transfer the 2 million. There's no penalties, fees, costs, none of that for that. As far as if you're retired, for an IRA, you need income. And if you don't have a way that you're receiving income from something, royalties, something, then you can't really have the IRA, but you want to check with your tax professionals on that. When it comes to better or worse, I am a fan of Roth IRAs. I think everybody should have one before the government realizes how much they messed up by letting people have them, okay? Because they're not going to get any taxes on your money later. Look what's going on with big money right now, right? They want to tax you on capital gains that you haven't received yet. You bought the stock for 10, it's now at 20. They want to tax you on that $10 gain, even though you haven't realized it. I doubt they're going to give you the money back if it drops down to 8 and let you take a tax deduction. Or maybe they will at $3,000 a year for the rest of your life or something. right? Which makes no sense whatsoever to me. So I am a big fan of Roth Iras. Both of my girls have them. My wife and I both have them. Our 401ks are Roths, right? So, and our 401ks are throughout one of our businesses, right? So yes, I am a big fan of Roths over traditional. Yes, you get a better tax deduction now, but your money grows tax-free. My cousin's retiring. I'm trying to give her the best advice. Thank you, Rob. So Brenda, here's what I would tell you. Amy, do we have Dale back on the schedule again yet? Do you know? Can you take a look? Brenda, Dale Zamzo is going to be doing another training coming up here. I don't know exactly when. I know he mentioned to me the other day that he worked with Amelia and the team to figure out some new dates. I just don't know if it's into the summer or what it is. Thanks, Amy. But one of the best things I could tell you to do is have her get in that class. She'll be able to ask Dale some of those questions, and he can kind of help walk through some of the things to do in there. But Dale is an absolute guru when it comes to this. I mean, he's working on some stuff right now in our trust for us, right? My wife, my brother-in-law, right? For the trust that is the parents for them. He's setting some things up for us now there. So he's my go-to guy, and our trust is a little tricky. So he said, don't worry, I've got someone that I work with that is a trust attorney, so I could ask all those questions. Yeah, Trader Will said Dale could help in a minute. Yep, without a doubt. Yeah, Brendan said you need to open, so you don't need income to open Roth. No. Roth traditionally, you need income, period. You need income to have any kind of IRA as far as I know. Unless rules have changed, you need income. All right. Good way to start it off. Okay, Jim, I got it. Okay, appreciate that, Jim. All right, so let's go ahead and do this. Let me bring us back into the presentation. And the topic today is correction or bear market. Right? And that's the magic question right now. Here, I put this chart together to make things a little bit easier. Thanks, Amy. To make things a little bit easier, I put this together. Okay. And what I put down was 12-month high. And that's one of the things you need to realize when they talk about a correction. It's not, and they call it a 52-week high, but it's the high in the last 52 weeks. It's 10% correction from there. 20%, if the pullback is 10%, it's correction. If the pullback is 20%, it's a bear market. If it's more than that, it's, oh my God, what's happening? The world's coming to an end, right? And I put down NASDAQ and RUT on the top because they have both of them have already hit 20%, right? I put the current price, no pennies. I just rounded everything here. I put the current price to the far right, current price column. So on the NASDAQ, 12,358, well, that's under 12,970 and above 11,349, right? But not by much in either direction, only a few hundred points either way, right? So we're somewhere between 20 and 25% there. Same thing on the RUT, between 20 and 25%. The S&P and the Dow were between 10 and 20%. That's where the yellow highlight comes in, all right? So when you look at the markets, I've got marked off this is the SP here. So I've got the S&P marked, and there's my high right there. I have the NASDAQ marked off, right? And that is not only the 52-week high, but it is the all-time high, right? So there was our 10%. We came back and slammed it right there. We got close, finally broke it here, whipped back, broke again, and now we've come back for a third bite of the apple. And every time, you seem like we're going after a lower low. Not much between 1 and 2. Between 2 and 3 so far has been huge as far as closing lower goes, okay? So overall, we are definitely in this pattern of where does the market move from here? How much does it push down? You're seeing such whips in the market day after day after day after day, right? And just look at some of the candles that you see on here. right? I mean, look at the wick that you had here on this day, right? Which was on Thursday of last week, all right? We gapped down here on Monday. I think it was Monday, yeah. We gapped down on Monday, a little stretch down, big run up, right? Then we gapped down, big run down. Lots of activity on Wednesday of last week, right? Big move Thursday. Friday, we gapped down. We stretched back up towards the 8. We failed, fell apart. So I'm talking about, guys, there's movement. Look at the size of the candles. You know, you go back to the candles. We go back to the candles. I forgot I can't just draw anywhere I choose. We go to the candles that are kind of in here. Look at those size candles versus the candles you're seeing here, right? The ones we're seeing now are much bigger candles that push, that whip. It's all over the place. And people are paying the price. They're getting their heads handed to them with swing trades. And people are just all over the place, right? Those that know how to trade have great opportunities. Chris said the market movement on Friday was awesome. Absolutely was, Chris. Right? Talk about beating it down, right? From Friday's market mornings update, we had Apple came in as a newsy trade for earnings. We were looking at a bear call spread, a long put or pivot points, either one. I just went with the spread. We took in 70 cents on Friday, expired worthless. If you only did one contract, you made $70. Right? If you did 10 contracts, you made $700 for the day. NVIDIA, the entry price was just about 194 and the exit price was 186. 8-point move. And we had for NVIDIA, we had down, it wasn't news trade. NVIDIA was just one that I trade off power option plays. But you're talking about $8 move in there, even if you only got a 70 delta on that. That's $5-6 on your options, not taking into account gamma, which is rate of change of delta. Okay. So, all right, excellent, good. So I hope that helped. Let's go ahead. We've got a few minutes left. Let's go take a look at the candidates that you guys want to check out. And if you happen to drop anything in before, please drop them back in again. Brenda asked for the Qs. All right, so on the Qs, right now, we're at that 312.74 level. And we've kind of played around there, Brenda, right? So it's, again, that rollover at that 618 has just been devastating for the market, right? Just the pullback has been brutal on the overall market there. So right now, where are we? We're in a bearish bias, true bear, right? So I would like to see one of a few different things could happen here. If we just keep pressing to the downside, give me a close below the 312.74. And it looks like, well, we'll definitely need a 300 in there. So let's put that in. Whoever would have thought we'd have to draw 300 again. Okay. We got a 300 and we got 299.5 to 312.5. We'll call it 12, 13. All right. We don't need to fib it in there. Okay. We're good space wise. Guys, drop in the candidate you want me to take a look at. The only one I'm seeing there is from Brenda. We're going to make this a very short show if you guys have nothing to look at. So Brenda, I'd like to see it ideally close below the 312.74, retest and fail. And some will say, well, Rob, what about the breakout today? So watch. 312.74. Let me write it down. 312.74. And let's go take a look at the Qs. So there was the breakout. Without a close below, there was the breakout. And what happened? If you took the breakout, it whipped right back, snap, right back up, right, to where it is right now. So a little tickle there. All right. So, Brandon, that would be my preference. If you can get a good setup where we move down to about that 312, 311 and 3/4 level, close near there, retest that 312.74 and fail, I'm okay with that, right? Because as long as you got that tight stop, you're okay. All right. Now, if we do move up, I'd like it to move up near the 319 level and fail off of there. The 8 moving average would be right on top of it, right? And then Brenda also asked for SPY, as did Jim. So we're looking at 406.5 and 420.5. We'll call it. That's about 14 points. We don't need a Fibit inside of here, so we're good to go there. I would definitely want to look at pivot points on SPY. So from 11 o'clock, we've just been range bound, just nothing in there, right? We did get the push up, the retest of the pivot and the bounce. We went from pivot to pivot. So we went from S1, which is 410.80. And the pivot is 416. So 411 to 416, you got a $5 move in there with a scale out halfway through. Right. And that's what I'd be looking for this afternoon. Can I get some bounces and moves up or down? Doesn't matter. Brenda said, how do I get pivots on my charts? I use TOS. I know they have them, Brenda, but I don't use it. Will or somebody, if you got an answer for her, outside of call them up, guys. I mean, I called them this morning for something account related. I had to call them this morning and the guy made it very clear to remind me that 24/7. So Brenda, Will said you need to add a study. You don't have to calculate the pivots. You add the study. So Brenda, you got to find out how to add a study and you'll have a pivot point study in there and it will automatically add them for you. The study would be called pivot points, right? Will, is that the exact name, pivot points? It's going to have pivot points in the name. Will likes the SPEV. SPEV. They've got several. He said that's one he likes the most. SPEV. Oh, wait, sorry. Okay, never mind. It's it's SVEP. I don't know if I just mix the letters up or we'll mix them up, but whatever it is, SVEP. Trip said, yes, SVEP pivots are closer to yours. Okay, good, good. Appreciate that, guys. It's always awesome to have people like Will and Trip in here who know how to use other platforms and are so much willing to participate and help everybody else out. Yep. Chris said, thanks, Will, as did Brenda. Yeah, thanks everyone. Brenda said, yep. It's always helpful, guys, when you've got someone else there. So SPY 406.5, 420 3/4 or support and resistance. I'd like to move back up to 420 3/4 and the fail would be my ideal. How about that? All right, Kevin's asking for Netflix. Kevin, we may see this for 3 more months until the next earnings come out. They've just died, right? Could you trade them between the 185 and the 200? You could, but I don't know, just too flat for me. The fib is very big range right now, so I'm not a happy camper with that. Well, there we go. Okay, that's what I was trying to do, stretch it out. See, we've only had one of the last 4 days that have gone between the 185 and the 200. And that was on Thursday. So just not really Not a fan of it. Just day trade it. Pivot points can potentially work on it as well. We're still getting about, it's not an accurate number. Wilders is calculating almost $40 for every 2 days. So $20 a day. I don't think you're going to be getting $20 here. Let's see. No, let's not use that. Let's use Friday. High to low, 190 was the low and 205. So 15. Yeah, so we're getting 15 points for that day. So you're still getting a decent move on it, right? It's just a matter of getting it off of the 200 level or off of the 185.13 level to look for that trade, Kevin. Right. I hope that helps. Roku. All right, so they pushed up. We had them down as a bearish bias yesterday. Earnings have already come out. Bearish bias with the day trade. The earnings are already out on them. So the fail off of this $100.51 level would be ideal. We just need to get under 97.25 to take that trade. But we're looking at a potentially bearish trade there. Who said that? Okay, so Trader Will said Netflix is at the base from 2017. Exactly. It's just hard to see it on mine. We made it even worse. There's a monthly chart. All right, so here we're back. It's just there is some history for them this far back is what it comes down to. Yeah, look left. Exactly. You're welcome, Kevin. All right, let's keep going. So Erica, again, caution on Roku, right? We went through, but let me make sure. Caution on him. If I can get that fail, 88.5 is my target. If I get a bounce, you got to be careful because you got the 105.85 as resistance right above. Chris is asking for SE. C Limited. All right, earnings coming up. Number one thing to be aware of, they've got earnings coming out shortly. Confirm the date, but this shows the 16th. That's earlier than my 23rd date, so we would want to call that an earnings trade. As far as Fibs go, yeah, we're so far down. I mean, this has been so beaten on. Goodness gracious. I don't have a longer run, but we did close below the negative 618. But the problem is, even if I identify off of this move here, all right, well, it's actually not bad. It's actually not too bad. If we split this level here, all right, so about 77.75 is the downside on SE, Chris. So give me the fail off of the confluence and you've got a good opportunity. Don't know what their options look like. Obviously, you'd want to check that out, but there's some opportunity there. All right, I hope that helps. Karen, and I saw Roman in here asking for, I think Roman asked for the same thing, NVIDIA. Earnings on the 25th confirmed. Yep, Roman it was both NVIDIA. Okay, so let's go back to a bigger picture on scrunched. Moving averages are on a true bear bias. No question about that. I love the confluence of the -136 and the 8 fib line. Right? We do have earnings coming up on NVIDIA 25th. Right? I show them as confirmed, but you always make sure to check them before you ever put a trade on. Yeah, you're right, Kevin. That's why this class is great. Everyone shares. Yep. It's building community. I say it over and over again, how important it is. So let's bring it in. Give me the move up to that 195 and a close near it and the fail, and NVIDIA works. Other than that, without using pivots, I've got nothing that I want to trade this off of at all. Nothing about this says, ooh, take me, take me. All right. Hope that helps. Dow, and Linda said took from Covered Call Explorer. So we needed to close above the 8 on it, which we didn't get today yet. All right. So we're doing nothing. So Linda, I'm in position number 1 in the chair right now, doing absolutely nothing with this. All right. Until you get that close above, I wouldn't be taking anything on it. So just follow the rules, set back with it, and you'll be okay. Hope that helps. Let's see. Just trying to make sure I keep up with questions and symbols. I'm not waiting too late to answer. All right, so let's see. Trip's asking for Micron, the Trip Trio. All right. So I love where the 8 is right now, Trip. If we can get the break to the downside, I'd like the 8 a little bit further down, but we've got to be within our 13% that we prefer in pop. I mean, I'm sorry, in mastermind, inner circle. We're right there. We're right at that 13 now, Trip, right? So I like where the 8 is focused. Give me the close below the 68.36. Fail, retest, and drop. Brown on rice, baby, like brown on rice, all over it. Right? That's Micron, itty bitty machine, or if you work for them, I've been moved. And if you do work for them, you haven't been moved, you will be. So good, strong pullback, Fibonacci 4-step trade, wunderbar, right? Second time worked out a little bit better with the retest and the fail, just great setup, right? Third time was same thing. Worked well. Okay. So right now, though, where are we? We're in a neutral bias as of even yesterday, Trip, before today's candle even happened. So get back above the 8 or get the moving averages to flip. Problem is, even with getting back above the 8, we might be a little bit too far away from that 618. Might be. You'd have to measure it, right? But 133.28 is your defining point first, and then that 134 level. And we already did NVIDIA. So I hope those help, Trip. Jim said, does TradeStation have these pivot points on them, or did you write these? They're not mine, Jim. There's somebody else's that allowed me to use them. He keeps saying he's going to let me offer them to you guys and just has never put it together. But TradeStation doesn't have them. I did see on person pivots, they have those. Those are free, and they're okay. But then the guy who wrote them, persons, I guess, has another indicator set that's very expensive every month for pivots, in my opinion. So I don't think they're that good to pay that kind of money for them. But you'd have to make that decision yourself. TradeStation has very much gone the model of, we lowered our prices so much, we're going to charge you for everything else, including the education on how to use the platform. Starting over again today, I would be using TOS, without a doubt. We got NVIDIA, look left, we got that. Brendan said 206 on the Qs, put it just now. Nice job. Erica said, I used to work for IBM. Were you moved? Let's see. Good, Joe. I'm glad the pivot point answer helped. Yeah, nothing great there, Brenda, for the pivots. So, hey, Amy, can you drop that key to be free link in again, please, if you would? Guys, if you haven't registered yet, don't wait. Don't think about it. Don't wait. Just go ahead and get registered for this key to be free training, right? And you can read it. I mean, there's a lot of good stuff on here, right? You can read about some of what we're doing. right? And this, of course, is the first training that comes up, right? But go ahead and get registered for this training, guys. You will not be disappointed with it. Haven't done it now since last year, and not sure when I'm going to do it again. So take advantage of it. All right. There it is. Amy just dropped in. Thank you so much for that, dear. With that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, don't forget to register for Key to Be Free, because you truly are just one trade away. Thanks, everyone. Have a great day, and I will see you soon. Bye for now.